Welcome, everybody. Muy buenas tardes, good afternoon, buenas tardes. Thank you very much for accepting our invitation to attend this webinar today, an event that we have labeled Brazil Challenges and Opportunities from the Upcoming Transfer Pricing Reform. A reform that, well, we are almost sure will be the result of the outcome of the joint effort carried out by the OECD and the Receita Federal do Brasil, which is the Brazilian tax authorities, in the past 2 years. A reform heading, we hope, toward the convergence of Brazilian TP rules with the OECD standard. My name is Bernardo Solano. I'm a senior partner at Base Firma. I am located in Madrid, and I will be the moderator during this event. This is our fourth webinar in this year, and we are very happy by the overwhelming response from our clients and prospects. Definitely, in these COVID times, it has proven to be an effective tool to be in touch with all of you. Very briefly, for those that don't know Base Firma, let me just state that we are a transfer pricing boutique firm specialized in this topic. We are already established in the market for more than 18 years, and we work through our 13 offices located in 10 different countries. We would like to stress that our major focus is transfer pricing in Latin America and the Caribbean, a fact that has been acknowledged by the International Tax Review by awarding Base Firma the prize for the best transfer pricing firm in Latin America for the years 2018, 19, and 2020. We are really very proud and happy about that. There are existing times in almost a privilege to be a witness of the process of an almost certain movement from the Brazilian tax authorities toward the convergence with the OECD. It's really a pleasure to have invited very distinguished guests to discuss with us something that will be an outcome that, even though it's not yet there, and we know that there is no reform now in place, but this will be a good opportunity to discuss its potential challenges and opportunities, and if there is some possibility to discuss and go a little bit ahead of time. So, having said that, I would like to introduce our speakers today. We have first Patricia Varela. Patricia is a senior lawyer at Castro Barros Advogados, coordinating tax consultancy and transfer pricing activities in Rio de Janeiro, Sao Paulo. She has more than 10 years of experience in this field. Then Patricia is joined by Rogerio Leite Araújo. Rogerio is a senior tax executive with more than 20 years of experience in taxes and has gained a wide experience in multinational companies like General Electric, IBM, Electro, Capgemini, and Arista. He's currently working at Tetra Pak, which is very, very interesting for us to have the experience from the industry point of view. And finally, I'm joined by David Santana, our partner and colleague in Base Firma Brazil. Mr. Santana was a senior manager at Ernst & Young in Sao Paulo and a senior consultant in Deloitte. He's now with us in Base Firma, and we are very happy and proud to have him on board. Well, I think we should really, for the sake of time, we should go into our topic. But first, we would like to provide you with a very small introduction in which we ask my colleague David to give us a quick flashback on the major TP events that have brought us to the current situation and to today's discussion. So please, David, go ahead and give us this very quick flashback. Thank you.
Thank you, Bernardo, for introduction. Hello, everyone. Thank you all for accepting the invitation for our webinar. Thank you, Patricia. Thank you, Rogerio, for joining us today. So I would like to walk through the main events related to transfer pricing that was issued by OECD and the Brazilian Receita Federal during these years. I would like to start for the first movement of OECD related to the bilateral tax treaties that was issued on 1963 with the Model Tax Convention on Income and on Capital. That was one of the first movements on this matter. On 1995, we have the new transfer price guidance This transfer pricing guidelines was issued to replace the outdated version from 1979. That version, 1979, I think that was the inspiration to our transfer pricing rules. We did not take a look on the most recent considerations that was addressed on 1995 report. And on 1996, we have the first transfer pricing rule in Brazil. It was designed in 96 and implemented take force on 97. This transfer pricing rules, this bunch of transfer pricing rules that was issued, failed a lot in cover the two main pillars on arm's length standards, on the principles of OECD, that was cover the non-taxation and the double taxation. We faced several differences between our rules and the rules that are followed by most countries in the world. We have fixed margins, we have a product by product analysis, and we have the possibility to choose methods. And those combined factors came in creates an environment that are favorable to non-taxation or double taxation. In 2000, we have the introduction of the most used method in Brazil, the resale minus, with two fixed margins, one for production and another for resale of products. Our rules were designed much to test tangible goods, and that was another problem on our current transfer pricing rules. In 2002, we have the biggest issue on the transfer pricing in Brazil, the normative instruction 243. This normative instruction changed the way the mathematical formula of the resale minus, that was the mode that is nowadays the most used method in Brazil. And that change elevates a lot the adjustments of intercompanies in Brazil. So this intercompany transactions, the import of products in Brazil was directly impacted by this normative instruction, and also the court cases increased a lot because a normative instruction could not change what was stated by a law. And that mess was only solved on 2012 when the new law was introducing, incorporating the normative instructions into the law. So it solved the problem on the court level, let's say it like that. So, and this issue was solved on this way. However, we did not take a look on the relevant questions. That was the product by product analysis, the fixed margins is still there, and we create a method for to test commodities that was using a method, a comparable method that was not adequate to test tangible transactions. On 2013, we have the BEPS, the G20 countries and the OECD working together to avoid the base erosion and profit shifting across the world. So those rules was implemented, was issued to the countries. Brazil, as a G20 member, has signed much of the actions that was issued by OECD. One of them is the country-by-country report and the MAP, the Mutual Agreement Procedure. In 2017, we have the first official movement from the Brazilian government to join OECD, to join the club of OECD. Michel Temer was our former president at the time, sent the letter to join the rich club, as is called here in Brazil in sometimes. We are in a better position in the past. In 2008, Brazil has been invited to join OECD. At the time, we had Lula as president and Guido Mantega as the Minister of Finance, and we show lack of interest in joining OECD at that time. Now we need to comply with the formal procedure to be accepted. And one of these procedures is to adapt our transfer pricing rules. So in 2018, Receita Federal and OECD sit together in Brasilia, invited the taxpayers and the community in Brazil to discuss the alternative of alignment of the Brazilian transfer pricing rules in OECD. This program was introduced in 2018, and 50 months later, back in the end of 2019 was issued a report of these convergence possibilities. This report showed 35 gaps between our current transfer pricing rules and the OECD standards, and it states that the only possibility is a full alignment, with the possibility of immediate alignment or a gradual alignment for larger companies in a first moment, and then following for cover all the companies in Brazil that has transfer pricing. Now in 2020, 2 months ago, Receita Federal and OECD prepared a survey to the taxpayers, and this survey is aiming to look for what is the taxpayers' opinion on creating safe harbors. Receita Federal has always tried to make our rules as simple as possible and predictable as possible. And they found on the safe harbors an alternative to that. So that's the moment that we are now, Bernardo. I think that this is a small introduction of the timeline of these measures that was issued by OECD and Receita Federal so far.
Okay, David, really thank you very much for this guided tour, guided journey about the transfer pricing history in Brazil. I would say that I would just a small comment saying that, of course, Brazil, if you see the figures of the economy of your country, I think it not only deserves, it should be in the OECD. But I know it's a political statement, a sensible one, but it's not just a rich club, it's also a club of countries with good governance and good practices. So it will be very interesting to see what will go ahead. Well, I think it's very important that we shift now to talk to our guests and also to hear the opinions of what they fear or they not fear, that they think that will be coming in this new legislation, these new transfer pricing regulations. So I would like to give the word to Rogério to ask you, in your view, what are the main challenges that the industry will face in order to adopt the standard of the OECD documentation model in Brazil? What do you think is going to be, from your point of view, from being sitting there in Tetra Pak, what are the main challenges for the industry? So Rogério, please tell us, what do you think about it?
Hi, Bernardo. Hi, David. Hi, Patricia. It's a pleasure to me stay here with you guys to discuss this very important topic, and I think it will be in our loop in the following years. Since we are still in the time of answering the research, and we do not have the final definition or the final legislation that will replace our current legislation about transfer pricing. Everything that we have been discussed is based on assumptions that what would be the final outcome of the transfer pricing legislation. And as mentioned by David, we have this approach to move a simple and objective way to determine the transfer pricing calculation as desirable by the tax authorities. And when we're talking about the simplicity, we are talking about safe harbors and APA, develop both kind of calculations. And when you're thinking about safe harbors, I think the first problem or the first issue taxpayer we would face is how to have a comparable. Since in our experience, to have a comparable only from Brazil is very tough. We have a very few companies listed, so the available data to compare our business to another business is like difficult. So in that sense, I think one desirable comparability should also include information from abroad. It's something that we need to wait and understand. And even still talking about the safe harbor, we don't know yet if it will be determined by segment, companies, or industries, or products. Is something that we'll have the clarity in the end and see if it's feasible or not to apply the safe harbors. The second one is about the DAPA. APA, we have a few experience in Americas or I mean Latin. We have a case in Mexico where it was built for maquila companies, and we still don't know if in the future Brazil will work on this. So it's still unclear if APA will address, since it will apply for more complex structures. And one thing that also concerns a lot, still concerns a lot the taxpayers in Brazil, is about the royalties and services and cost sharing agreements that we do not see any kind of shifting from the current legislation to the new one. I don't know it will be addressed on the new legislation. It's something that concerns a lot. So since royalties, we have a legislation from 1950s, and the rehabilitation to deduct the portion of expenses. So something that I understand still on the loop of the taxpayers in Brazil or in the tax practitioners. I think this is the main issues or main concerns.
Okay, Rogério.
Taxpayers are facing in the upcoming legislation.
Okay, Rogério, thank you very much. I think you have touched on 4 very important points, and we'll be also dealing with them later also in this webinar. Of course, everybody will be expecting that something will be decided in terms of safe harbors. Also the issue of comparability, if they are really moving forward to really close the gap between the Brazilian transfer pricing model and the OECD standard. Also the issue of APAs, of course, a crucial one in this moment, and we will discuss later with Patricia about it, and the link with also the possibilities of safe harbors, APAs, and disputes in general, and royalties. So definitely we'll come back to those 4 points, but let me take advantage of just that David is quite fresh talking now here to ask him about the issue of comparability. From a practitioner point of view, how do you think are going to be the main challenges of the issue of comparability in Brazil, besides going, as you mentioned, not only to full alignment, but gradually, and knowing that with safe harbors will be the first approach, but the issue of comparability is a major one. So David, please, can you share with us from your practitioner point of view, what do you think are going to be the major issues in that sense?
Yeah, Bernardo, as Rogério said, Brazil has a lack of comparables. That will be a challenge. Just to put number on his statement, Brazil has only 35.8 companies listed on the stock market exchange. And those companies are the companies that has much more information available to become a part of the comparability analysis. It is just a fraction of the companies that are listed, for example, in the US. There we have more than 10,000 companies listed and much more to come. So the information is available, the information is there. Not only information of comparables of companies, but for contracts, for royalty agreements, for services. All of those informations are available there, and we do not see those informations with easy access here in Brazil. However, this is not a particular situation of Brazil. Much of the countries in Latin America has faced the same when implemented the transfer pricing rules based on the OECD guidelines. The most used method around the world and also in Latin America is, for example, the TNMM. This method compares the margin obtained by the companies, taking in perspective what are the risks, are the functions, and the assets implemented on the company, on the business, and the transactions itself. 10 of these countries use not local information, but external data to make those comparisons. That is one way that Brazil could follow, with a huge study on how to prepare these standards, these comparability standards, these necessary adjustments on those transactions. I think that it is a problem now that we cannot have the local comparables, but external ones could work perfectly for Brazil. That's my view.
Okay, thank you very much. Of course, we know that for those countries that we have been working for years under the OECD model, We know that comparability is always a major issue. But I think that the main challenge then from the Brazilian point of view is also to keep the mind and, in this direction. We know that Brazil definitely wants to protect the simplicity and the certainty of their system. That's a fact. But all this new approach will bring certain uncertainties. And of course, they'll be linked also in the future to certain disputes. So I think that also from that point of view, from the legal point of view, the question of disputes will be really on the table. And we know that we heard from different contexts that sometimes the more objectivity is associated with the Brazilian model, with the safe harbors and also with the fixed margins, and more subjectivity is associated with the OECD model. But independent of which position you will take, disputes will be really on a major issue in the future. So I would like to invite Patricia to please share with us your thoughts about what is your perception of the possible disputes that these new transfer pricing rules might bring in the Brazilian arena. So please, Patricia, go ahead.
Well, first, I would like to thank everyone at home for joining us today. And thank you, Bernardo and Davi, once again for this invitation. Thank you, Rogério, for joining us. And Bernardo, my perception is that with this alignment with the OECD standards, we will most likely increase litigation in Brazil. This is the perception of the market in general. See, now, as mentioned by Davi, we have rules that are based on objective criteria that have pre-established fixed margin. And most of all, that the taxpayers may elect the method that is more beneficial for the transaction. So, of course, this resulted in very low tax adjustments of the taxpayers, and throughout the years, a very few tax audits. And those audits that became an assessment, the assessments are merely regarding errors in calculation or regarding the normative instruction that has already been revoked, so an outdated discussion. So this freedom that the taxpayers here in Brazil have to elect the most beneficial method, at the end of the day, resulted in greater simplicity and legal certainty. But although despite all these arguments, the OECD final report decided that this freedom ends up resulting in double taxation and double non-taxation in transactions. So they require the full alignment. And once we align with the OECD standards, instead of objectivity, we will have subjectivity, because we have to understand what is the arm's length principle. We will have to understand what is a comparable, as mentioned by Davi and Rogério in the transaction. And most of all, we will believe in the most beneficial method to enter the method that is more appropriate to the transaction. Well, what is more appropriate in the understanding of the taxpayer will not necessarily be the most appropriate to the tax authorities. So these, of course, will lead to further discussions, and of course will increase litigation. The OECD have a lot of methods to dispute resolutions methods to reduce those disputes. One of them is the safe harbor that it's currently being studied by Receita Federal and OECD here in Brazil. The other one is the Mutual Procedure Agreement, the MAP, which opens up a dialogue between the two tax authorities involved in the transaction. The MAP has been adopted by Brazil since 2018, but in a very timid way and only regarding double taxation. We never seen a decision regarding double non-taxation. And the other method is the APA, the Advanced Price Agreement mentioned by Rogério. The APA, at the end of the day, is the taxpayer going forward to the tax administration and anticipating the method and criteria that they use in the transaction, giving more transparency and trying to avoid further disputes. But see, the APA will require the tax authorities, we don't have APA here in Brazil, and we will require the tax authorities to receive the taxpayer and open a dialogue with the taxpayer. And this is not a very common practice here in Brazil. Actually, when a taxpayer is being audited, usually the tax administration beforehand decides that they are trying to avoid taxation. So in order to the APA to work here in Brazil, to be implemented here, this will require a big change in behavior between the relationship of the tax administration and the taxpayers. And aside all that, the difficulty that we have to implement the dispute resolution methods throughout this whole project, Receita Federal representatives in many occasions said that the capacity building of the tax administration is a big issue, because here in Brazil, we don't have a staff fully equipped in Receita Federal to deal with tax audits and disputes involving transfer pricing. So this will require a big change, a big effort of the tax administration, of the taxpayers to understand all those changes. And at the end of the day, we know we will increase litigation because we are going for more subjectivity. But in order for the dispute resolution methods to work, we will have to have a change in the mindset of the tax administration. So I think this will be the biggest challenge here.
Okay, Patricia, thank you very much. Well, I think it's really interesting how you see a panorama of increasing litigation and really, let's put it this way, like opening-minded to see how the tax authorities will take all these new approaches and how they're gonna turn that into more audits or less audits. It's very interesting that, of course, as Rogerio and David had mentioned before, there are certain periods that they'll have to pay well attention in order to guarantee and to try to keep for the tax authorities that simplicity and that certainty. Definitely, the decision to go through a full alignment in a gradual process implies that safe harbors are going to play a big role in that process. Maybe it will start diminishing with the time, but they're going to play a big role in the time to come. So in that order of ideas, I would like to ask, to invite David to share with us his thoughts about how do you think the Receita Federal and the intention of the OECD to keep the Brazilian rules simple with the safe harbor approach can, in fact, jeopardize the full alignment with the OECD standard. So maybe what is expressed to be the good way, the good alternative to come to this full alignment, maybe can end up jeopardizing it. So David, please share with us what you think about it.
Bernardo, in my view, Brazil, and I have heard that so many times from foreign colleagues, that Brazilian transfer pricing rules are already, the current one, are already a big safe harbor with these fixed margins. You are in or you're out, you have to comply or not based on what margin do you reach. So we already faced this issue, and we know that we have some advantages on use of safe harbors and some challenges on that too. I can enumerate some advantages: the simplicity of the compliance and the reducing of the compliance cost. Once you are qualified for the safe harbors, the full documentation process are not necessary anymore. It provides some level of certainty to the taxpayers and also to the tax administration. And it is also easy for the tax administration to focus on the most relevant transactions and giving away and focus these efforts. As Patricia mentioned, they don't have much professionals, much auditors to monitor every transaction that occurs in Brazil. So with safe harbors would be an option also to preserve the facility that Receita Federal wants to keep in the Brazilian rules. However, we have some problems with safe harbor too. Safe harbors, if they are not well designed, and if they are not designed with a bilateral conversation with the other country, can generate the same problem, the double taxation or the non-taxation of a transaction. I can remember that Peru stated, for example, a fixed margin for financial transactions, no, not financial transactions, whereas technological transactions. So it was 5%. And Colombia prepared a study based on the arm's length full arm's length principle, and they stated that these transactions should be paid like 7%, should be paid 7%. So this 2% gap was a limitation that was not covered because a safe harbor that was designed with a fixed margin. It opens avenue also to tax planning situations, to aggressive tax planning situations. And I think that more likely would create also a problem with litigation. As Patricia stated, taxpayers will claim that he is in the safe harbor, and Receita Federal can say, hey, you are not. So these safe harbors should be designed really carefully to not create a different monster, a different problem from what we do have now. That's my view, Bernardo.
Okay, thank you very much. Well, I think it's very interesting what you just said, especially about the eligibility and the criteria to be a candidate to be placed in a safe harbor, because by Brazil, following the full alignment in a gradual process, also have to define if that the gradual alignment will be horizontal, and I mean by industry, or also transversal, going about intercompany transactions. And the same applies for the safe harbors. So it will be very interesting if the message to the outside world of certainty, because the certainty is domestically is okay, but now the issue is to give this message of simplicity and certainty to the outside world, which is really the challenge for the Brazilian tax authorities. And of course, if those safe harbors, the criteria of eligibility to being placed in a safe harbor, but also all that criteria and all those rules are reviewed constantly and updated, that for sure will give also the taxpayers, also the potential investors in Brazil, more certainty, and will lead to also to more arm's length outcomes in all this analysis. So I think there is a lot to be done there, but maybe it's really the most wise path to follow at this moment. But it has to be reviewed carefully and keep very well updated. I know that at the beginning, Rogerio mentioned also that one of the problems also in facing the big challenges of approaching the OECD standard is that there has not been in the current Brazilian rules, a lot of clarity about and also guidance about certain transactions, and that by that we mean by transfer of intangibles, for example, APAs, the allocation of profits to permanent establishments. Also very important is also the intercompany services. So those are transactions that have not been looked carefully and that are very important in this for the OECD standard. So this brings me to the topic of intangibles, because of course you have mentioned also, Patricia, that intangibles is a major issue in Brazil. And I think that in Brazil, intangibles have in Brazil a specific legislation, which is not covered by the current transfer pricing rules. So the question will be, what are the opportunities that Brazil has to implement to better align this topic with the international standards? Because there is a big gap between the current situation and the OECD standards. So, Rogerio, maybe you'd like to share your thoughts about this concrete issue of intangibles. That would be very nice. Please go ahead.
Thank you, Bernardo. When you see this discussion about intangible, I mean, royalties, services, cost share agreements, we usually study on a local base. But now, since we are in a BEPS world, we have to analyze and to be consistent what we are doing around the world. So it means what the company charge to its subsidiary in United States or France or whatever it is, should be consistent with this charge in Brazil. And when we try to implement those kind of structure in order to pay royalty services or cost share agreement, we struggle to implement a consistent approach as we see around the world. The limitation about the royalty is something that is a big issue and create exposure not only in Brazil, because Brazil we should follow the limitation of 5%, but it creates a global exposure since we are the companies are charging less to its subsidiaries in Brazil. Cost sharing agreements is something that also most taxpayers in Brazil is struggling to put in place, since most companies charge some markups. It's about 5% usually, and since our markups on charging those costs in Brazil is considered services. In that sense, we have right now a huge withholding supply of those services that makes very expensive to pay cost sharing or services in Brazil. So this is the main challenges when we think about in a world that now is should follow the BEPS procedures when we try to adapt the intangibles to our current legislation. And as I mentioned in the beginning, I don't know, it's still for me it's not clear that it would be addressed by the new upcoming legislation.
Oh, sorry, I was on mute. Okay, no, Rogerio, thank you very much. I know, Patricia, you really have, you have indicated me that you want to make a comment about Rogerio's point of view, so please go ahead. We have, I think we can always to have this balance between the industry approach and the legal.
From a legal standpoint, from a tax standpoint, actually, I think that intangibles are one of the most main issues to be faced in this alignment with the OECD. The digitalization of the economy is top priority discussion from OECD and the G20 countries under the BEPS project. No wonder it's under Action 1 of BEPS, so it's since the beginning this discussion is in hand. And here in Brazil, as you mentioned, although our TP rule states that expenses with the rights borne by the Brazilian company are deductible from their corporate income tax according to the TP rules, the deductibility of royalty expense still and royalties, right, are the main retribution for intangible rights. They still under a current legislation. Well, a current legislation, as mentioned by Rogerio, that was enacted in 1958, so not that current, and that states a limitation of a maximum percentage of 5%, 1% in case of trademarks on the gross income of the product sold or manufactured. So it's a very low limitation, a limitation that ends up here for the Brazilian company increasing corporate income tax. And when you're talking about transactions abroad, in many cases, it creates a double taxation of this royalty income. And here, under the digital economy, Brazil, you got to think that the Brazilian companies, they import the technology and the know-how from abroad. So the royalty expense are one of the main expenses of those companies. And so the expectation of the taxpayer that this be aligned in these changes with the alignment with the OECD will force the change in our current legislation to include royalties. And since the OECD decided for the full alignment, why stop at royalties, right? You have cost sharing, you have intragroup services, we have financial transactions, many other transactions that are not in our current rule, and that in order for us to have a full alignment with the OECD, we have to address those issues. As Rogerio mentioned, I don't know yet, they haven't decided yet how they will address it and if they are going to address in this moment, but a full alignment requires to be full to address everything. So.
Okay, thank you very much. I think that that issue of intangibles gives me a good opportunity to link with another topic that we wanted to discuss, because, of course, once again, this gap between the OECD standard allowing, for example, a 5% on sales to be paid on royalties versus a 1% also in Brazil, and not even on sales, but also on gross profit, is something like it can really jeopardize the inclusion of Brazil in all the global, let's call it like that, global value chain restructuring of a multinational group. Because at the end, of course, every tax authorities will try to really reach two major objectives, that is to protect the tax base, but also to provide the tools to avoid double taxation. And if these gaps continue there, well, always that there will be something that there will be a risk of having a double taxation if you want to include Brazil in this global value chain restructuring. So that brings me to this issue of business restructuring that I know is very wide, but I would like to, in this case, to have the opinion of the three of you regarding that. How do you see the Brazilian companies? How do you see the point that they will need to adjust the business functions, the typical OECD, approach, the question of functionality, functions, assets, and risk assumed to justify the current margins? Or better, should they continue following the transfer pricing policy of the group? So do they really, as an entity in Brazil, will have to go through a major business structuring, or they just go and remain the same and follow the group transfer pricing policy? So David, please go ahead, and what are your thoughts about this point?
Bernardo, Brazil has played the ugly duck tale during many years. So Brazil is not part of the transfer pricing policy of the group. I can say that I heard 100 times that, Brazil is different, Brazil is special. And this special word is not for that we are special in a good way. So what we need to do and what the companies can start taking a look is this function analysis that should be performed on a transfer pricing environment, on an OECD guidelines environment. Understand what are the risks, what are the functions and the assets implemented, and how they are compared with the affiliates across the world, and how those companies is being remunerated now. It could give a thought on how those functions in Brazil should be adjusted if necessary. We know that we don't have any legislation in place now, but for curiosity, these companies can already take a look on that. If they are functions that are performed in Brazil and abroad, if they are risks that are assumed locally that are not being remunerated now, if they have assets also that are not compatible with the margins, with the level of the margins achieved, this is some work that can be prepared in advance. This is a red exercise that each company can perform, taking a look on this new possibility environment in the future, or just to make this exercise at home and understand how they are comparable to other affiliates across the world. I think that should be an option to the Brazilian taxpayers.
Okay, David, that's really to the point, but then I really want to see what, from the industry perspective. Sorry, Rogerio, what do you think is your company going to face if this goes on, and if you're going to just follow the world guidance of Tetra Pak, and please, you don't have to talk on behalf of your company, you can talk on behalf of yourself, but what is your perspective about that?
Can you hear me? Can you hear me now?
Yes. Please go ahead.
Hello?
Hello? Can you hear me now? Okay. Talking about the industry in general, I still do not see any discussion whether or not the companies will adjust their structure to meet those 3 points that we mentioned: assets, functions, and risks. I think you still have a long way to have this new legislation in place. I think Patricia will come with her perspective about the timeline on that. But I still do not see any kind of a discussion to try to change any structure in Brazil based on the future of transfer pricing. I think we are still on the wait to see approach in that sense.
Sorry. No, okay. As I mentioned at the beginning, of course, we are trying to go one step ahead in this discussion. But it's interesting to see how the company is going to react. Because to be very honest, some of our clients now, for example, in Brazil, have been very interested to learn more and more about the OECD model, because of course they know that at the end they are now more under pressure by their peers and their colleagues on having this complete apart scenario that is Brazil and dealing with all the documentation and compliance around the world. But definitely, I mean, they will have to evaluate the situation, but maybe it's too early, well, who knows what is too early. So maybe Patricia, tell us, what is your thoughts about it?
Yes, of course, the companies will have to adjust their business. It is a whole completely different structure that they will face whenever Brazil aligns with the OECD standards. But I don't know, throughout this whole project, we see the companies very eager to try to practice their systems to the OECD standards and everything. But it's hard to predict how this will come out. As mentioned by Rogério, we don't have a new law yet. The Safe Harbor survey is still being answered by the taxpayers until the end of this month. Receita Federal and the OECD will have to process all this data. It's very unlikely that they will process all of the data until the end of this year and come up with a bill. Even if they manage to do so, this bill will have to compete with all the tax reforms bills that are currently in the Congress being voted. There is a great political motivation to have these TP reforms, shall we say, because the changes in transfer pricing is one of the main requirements of the OECD in order for Brazil to join OECD. But our political interest here in Brazil, it seems that right now goes to the tax reform. It is a top priority discussion for governments right now. And so my thought is that it's still going to take a while. We don't know what it will be included in this new law. After all the procedures and we have a new law, we know if intangibles are within this law, if cost sharing, intercompany services, financial transactions will be included or not. We don't know. We don't know which safe harbors we will have and how this will impact the business. We don't know how the new law will impact the different sectors of the business because we will impact it differently for some of those. And after we have a law approved and sanctioned by the president and everything, I believe that we are most likely going to have a transitional tax regime like we had whenever we had our change in our accounting systems aligned with the international ones. So it will take a while. Yes, you can try to run your numbers and try to predict, but my recommendation would be to hold it a little bit longer because see the next steps. See how Receita Federal and OECD will draft this bill and those changes.
Okay, Patricia, really thank you very much. Well, I've indicated that, well, our time is almost over because we don't want to take too much of your time. So I just very quickly to say that very few takeaways, but maybe to think about it. We took the initiative to have this webinar based on the fact that rules are not yet there, but we could be daring and try to already discuss among us what are those challenges and opportunities. Definitely, we have mentioned the issue of a major issue for especially in Brazil, of comparability. Also a major issue of giving more guidelines to particular transactions, including intangibles, transfer of intangibles, the charges for intercompany services, the question of APAs, especially also offering the opportunity, APA as a safe harbor. So if you are not into a safe harbor, you could be able to apply to an APA, as is the Mexican case. So because in Mexico, it's not only applied to Maquila, it's also open to all the taxpayers, but there is an alternative. The point of Patricia of also of having that change, a major change in the mindset is important. We'll see about this balance between subjectivity and objectivity, but I think that's the case in all countries, but now Brazil is going to face it because it's going to get out of their safe harbor in terms of certainty and simplicity, and that's also a major change for them. But we hope that this change will not necessarily be translated in having more disputes and having more audits because the mindset have not changed. So we hope that will be for the best. And we know from the OECD that the first thing they are really more open is to really train and educate and give guidance to this new approach. Then finally, well, we'll have to see. I will tend to, maybe if you allow me, maybe to disagree a little bit in terms of how be the proactive reaction of companies to this environment. Maybe they could be conservative, but a lot of other companies are really thinking that they might go ahead. So maybe let's see these multinationals, how they're gonna take it from there. But okay, having said that, I really want to thank you very much for your attendance. I know that for time constraint, we didn't give time for questions from the public, but we guarantee you that if you send us your questions, we'll answer them by email. We always do it. We keep our word. We do it. So thank you very much. And I hope to see you in our next webinar. We'll be announcing it quite soon. And well, hope to see you again. Thank you very much and have a good day. Bye-bye.
Thank you. Bye-bye.